Yo, welcome everyone to another episode of Weird Growth, the podcast where we talk to founders about their strange and often unpredictable journeys that they find themselves on in the world of startups. Today, it's my absolute honour to have Dan Jovevski here of WeMoney and Switch My Loan fame. And, a bit of a personality around the Perth startup scene. So thank you so much for joining us, Dan. I really appreciate your time, mate.
Great to be with you, Cam. Excited to be here.
Yeah, mate. Look, I'll let you introduce yourself if that's okay. You know, you've done a lot of things in your career and I'd love to sort of, pick some of that apart. But please, how would you introduce yourself?
How would I introduce myself? Well, I often say at the start of my career, I was a corporate dilettante, always a person that rebelled against the system in organisations, and that being in banking. But a long story short, graduated uni, went straight into banking. Actually, the story was I was living in the UK at the time,
right,
and ended up getting a job to join an investment bank. Yep. But then 2008, GFC.
Great time to be in finance.
Great time to be in finance, and then Lehman Brothers collapsed one weekend, and the offer that I had to start a job ended up being rescinded.
No way, really?
Well, blessing in disguise, which maybe at the latter part of the history we can sort of delve into. But packed up my bags, came back to Perth, and then started a role in banking. And about sort of 3 years in, saw an opportunity in particularly the mortgages space and just the pricing inefficiency and the way that consumers got mortgages. And so sold everything I had to start that venture.
Cool. So that was Switch My Loans.
It was. Yep. Yeah, that's right. Yeah, we did that for 5 years and exited that business in 2016 to a listed company called Pioneer Credit. Then spent 3 years working in private venture in a family office, and then more recently, in the last year and a half, at WeMoney.
Fascinating, mate. Well, look, before we get into the weeds with that, with the story, I'd give you a little pop quiz, if that's okay.
Of course. Let's do it.
If you were to start a new business today, what would it be in?
It's so interesting.
Notwithstanding WeMoney's, raging success at the moment, but if you were to start with a clean slate, what would you do?
I don't know why this came to mind, but I think about it at the back of my mind. I think things like agriculture, and I think some of the sort of core problems that still exist in the world around sort of food sustainability has been just a weird topic of interest for me that I've been delving into recently. But the more I think about most industries going through disruption, like you think about the obvious stuff like, creating a SaaS platform, right? I mean, there's, everywhere you can sort of look, there's something that with a SaaS platform behind it. But I think some of the more harder challenges that are yet to be solved that have a lot of human impact around food would be interesting to solve. And I think if you think about all the inputs that go into food manufacturing, and if you look at how do you make all those inputs more efficient and deliver high quality produce at a lower cost price, I think that's actually
pretty fascinating.
It's a really interesting topic. And so, if I was going to start something else, I think it'd be something actually completely different to fintech.
Yeah, cool. Yeah, I mean, I often feel that sometimes, we work in this digital space and sometimes what we do isn't super tangible. I often daydream about, being a farmer or, having a brewery or something where you're creating an actual end product which is going to end up in people's hands, but comes from nature. Yeah, it's probably 100%. A pretty fulfilling thing. As a kid, I grew up on a broccoli farm down in Denmark.
Fantastic.
And Meg here, she's a farm girl as well.
Oh, excellent.
From the wheat belt.
I love Denmark.
So, beautiful part of the world.
Me and my wife said we'll retire down there one day. So it's our dream.
One day, just do it now. Yeah. Just pack it up.
I know, tell me about it.
Yeah. So, mate, WeMoney is where you're at the moment, but that's the end, or where you're at, from a long sort of story about in this finance space. So what was it that drew you to finance originally? Do you remember what that was, how you felt when you were back in uni or in your early part of your career?
Yeah, look, I spoke about this recently, and I think it's really interesting as you get sort of a little bit older, you kind of look back at your arc of your career and you kind of, ask yourself the question, why did you fall into a certain role? And I think for me, sort of looking back, why was finance, an obvious choice at the time? Because there was nothing in the early childhood that said, I want to work in finance.
Yeah.
There was no sort of burning passion or desire until my sort of late teens, and then going into sort of uni and sort of discovering, hey, what do I want to study? And I think actually really tracing the roots right back to, I guess, my childhood and the way that My parents were immigrants. They came to this country with nothing but the clothes on their back. The proverbial sort of immigrant story.
Where were they from?
From Eastern Europe, from Macedonia.
Yeah.
So my grandparents immigrated here in the late 60s. Yep. My dad came here in the 80s. Got married to my mum, and then I was actually born there, and I came to Australia when I was 9 months old. Yeah, and I just remember, one of the sort of classic sort of stories of my parents, and I actually saw it firsthand about them sort of struggling to put, as one person called it, two brass kangaroos together and make a living for themselves. And that sort of early sort of childhood experience, always thinking about money, and money being a big sort of factor in our sort of household was now sort of in retrospect, maybe some of the fast forwarding, the reasons why we got into what I personally got into finance. But yeah, it's really interesting. I think my parents came from a property development background, and I knew I didn't want to do that because they're the ones that made me do all the manual labour. Yeah. So I thought there's no way there's going to be a career in that. But no, I just think that the sort of choice to go into finance was non sort of obvious. Like it was not like raging or sort of burning desire, and I really didn't know what I was going to do post graduation. And I think towards the tail end of it, I think investment banking became like a thing that I wanted to get into. Quite thankfully, I didn't actually. There's another story behind that, but it just happened. Like just fell into it. There was no sort of obvious or burning story. Yeah.
Okay. Yeah. And so I mean, when you started Switch My Loan, this was sort of early 2010s, which it was kind of before it was cool to be, have a side hustle or be in startups and stuff. Like, what made you do that as a young guy? That's quite unusual for the time.
Yeah, look, super interesting question. I think, when I was working in banks, the big, so 2012 was kind of like the transition between Web 1.0 and Web 2.0, right? Like Facebook just started to become super popular. Probably, I think, cracked maybe 100 million users at the time. And if you think banks are slow and bad now, just imagine what it was like 10 years ago.
Manual and paper-based,
and I often tell the story about me sort of being armed with a 45-page printout of a manual home loan application going into people's living rooms at night time.
Painful.
I think actually some of that stuff still happens today, funny enough.
Yeah.
But I just saw the complete inefficiency of people wanting to get a product like a mortgage and then going through a very exhaustive process of speaking to like 20 different people, but there was no sort of streamlined way that they could get the answer they wanted in a very quick fashion. And so that was the nucleus of Switch My Loan, was seeing the pain point firsthand from consumers and then looking to solve that through what I'd seen out there in the marketplace, right? You could go to eBay, you could bid on something. In fact, I bought one of my first cars off eBay. So
that's a big transaction for.
It was huge. Yeah, and it was a guy in Queensland, and we ended up actually seeing each other face to face in Perth. It was like weird. But I got the car delivered, and I thought, well, if you can buy a car on eBay, right? Yep. What about the mortgage market? Because all you're really doing for a mortgage when you go shopping experience is you're going to a mortgage broker, you're going to the bank, you're doing your own research, but ultimately you arrive at making a decision about what lender you want to go with. And where we thought there's got to be a much better way that you could go through that entire journey and short circuit, the pain that goes with finding the most appropriate loan. And that was really the birthplace of.
So you saw that problem, the opportunity to solve it. What triggered you to take the leap and say, okay, there's going to be me that solves this problem, and how did that feel?
I wish the story was glamorous, but it's kind of like I remember just going to my managers at the bank and just thinking, wow, there's got to be a better way we can go through this process.
Yep.
Customers are taking like forever to go through their journeys, and there was promises of like this program within the bank that they would go through what they call the mortgage transformation process, and all the stuff that you hear about today, like all the way back in 2012. And then just being an impatient 20-year-old, just thinking to myself, there's got to be a better way that this process can sort of unpack. And after, telling managers, hey, it's going to be done this way or that way, falling on deaf ears.
Good luck trying to do that.
Exactly. Yeah. And then I just said to myself, wow, like the internet's out there.
Yep. You just bought a car on eBay.
I sold it to fund Switch My Loan.
Wow.
And moved back into mum's place, and just thought to myself, well, there's clearly more people coming online to start their research journey. So why can't we create a platform that intercepts them on that journey and just fast tracks that entire research piece. And what we uncovered was it takes about 100 hours worth of research to select a mortgage, right? And so people don't, and that was back then, where you have to go through comparison websites, speak to brokers, speak to your friends and family, do all the comparisons, etc. And so we thought, right, let's save people 100 hours worth of research and bring them the value right up front. So yeah, that was it. Initial foray, or the initial sort of step was sold everything I had, moved back into mum's place. Started an MBA actually on the side, as an insurance policy. So if it didn't sort of work out,
yourself up,
get a job back on the terrace here in Perth.
Yep. How did that feel, going from working back to sort of almost back to school and starting again and starting a business?
I felt great. It felt sensational. Yeah, it felt really felt liberating. It felt absolutely liberating not to wear a tie or a suit or report to somebody. I think that was probably the biggest sort of
relate to that.
Yeah. And because I saw my mum being an entrepreneur for pretty much all of her life, I knew what stress it was, sort of being
involved,
like having a mum as a founder almost. I mean, I'm not a tech founder by any stretch, but certainly a founder in her own right in terms of running her own business. And so it was great. It was the best feeling I had in the world. The day I resigned, I felt happy.
So well done, mate. Yeah. And so how did you find those first customers? How were you getting in front of people when you first sort of started?
We literally just went to Google AdWords, right?
Yes.
We sort of knew there was aggregated demand.
So people were typing in home loan,
refinance home loan, and all that type of stuff. And so we knew that demand pool existed. And literally the first creation of Switch My Loan was literally a landing page that had a brief explanation of what we did and a 1300 number that people could call. That was it. There was nothing else that was glamorous to it.
Wow.
And we spent, I think it was about $5,000 on Google AdWords and Facebook in order to get some initial traffic.
Yep.
And I think of the first 100 visitors, we ended up having about 5 people enter their details.
That's a pretty good conversion rate.
Look,
5%.
Back then it was kind of okay, but one person decided to call the phone, and I had my mobile number routed to that 1300 number, and so I didn't know who it was. So I was like, "Hey, it's Dan." He goes, "Oh, yeah, I found your website."
Oh, sorry, just switched my loan.
That's right. I put myself on hold because I didn't know what to do then. I literally didn't know what the process was, and so
just putting you through to the finance department.
I did.
Hello.
I kind of had that sort of moment of pause, and it was somebody that wanted to go through the process of switching their mortgage from one provider to another, and having sort of no training or no script in place, it was that sort of customer discovery part of listening to their situation and then helping them go through a process of, effectively putting their loan up for auction so they could get a better outcome.
Yeah, mate, like basically textbook startup, starter playbook where you're just putting it out there and helping people with listening to their problems and figuring out as you go.
Yeah, totally.
So you kind of did it before it was the playbook.
Look, there was no Cam. Now you've got like Lean Startup. You've got a lot of the playbooks. You've got everything that's been sort of structured for you. But back in 2012, like there was none of that. Like nothing at all. In fact, the only podcast that I remember, it wasn't a podcast at the time. It was actually a video. And it was a paid subscription called Mixergy with Andrew Warner.
Right.
I mean, shout out to Andrew. He literally just interviewed founders before it became like a big thing and anybody could do it.
Yep.
And I just remember hearing the stories of other founders going through their problems. And that was like me and Andrew, right? Andrew doesn't know this, but he's like a technical, like co-founder of Switch My Loan.
Yeah, wow.
Even virtually. But he was on the journey because I think all the stuff that I learned was literally through that podcast. And then I guess the Perth scene just came to its own like in 2014, 2015, where we had like Sync Labs and co-working spaces and a few people having a crack. But before then, man, it was just me and the 4 walls. And so.
Well done. Yeah. And so how did you take it from that early stage, those first customers, talking to them, figuring out what the product is that you're going to offer them? What was the sort of scale up process from there?
Well, the scale-up process was, if you think about the process of getting a mortgage and then try to automate that journey as much as we could, was if you have a need for a mortgage, that's the first part. But then when you go to the process of selecting a mortgage, you go through comparing all the features and benefits of different providers.
Okay.
And we thought to ourselves, all right, we've got a 1300 number, we've got a lead form.
Yep.
But the real next step was a whole bunch of what I call Flintstoning, right? Is literally looking like a process is automated, but behind the scenes, the car's actually got no engine.
So you got the feet underneath.
The feet underneath when you're just logically going along. So what we did was, the essence of Switch My Loan was you come to the platform, enter your details, and then within 60 seconds, you get offers from banks that would all bid to win your business, right? It was a reverse auction.
Yep.
And initially what we did was a lead would come in, we would get the details about the borrower and what their requirements were, but then we would go out literally and just call all the banks and just say, hey,
manual. Wow.
Yeah, do it all manually. And we'd get the offers back, and then we would get like a template together and literally send an email across and saying, hey, here's your offers that we prepared for you. And then like hard coded like all the CTA buttons by like copy pasting like PNGs and adding links.
So doing things that don't scale. So that was And so how far did that get you?
That got us to like the first sort of year we did that, and then we decided to go, well, now we can get the process of adding in all those offers in the background. So we would run a process where we'd ping offers out to banks. Banks would respond automatically, so we didn't have to do that process to get scale.
Awesome.
But it was largely based on paid activities to begin with, and then over time we got a little bit of word of mouth, but I wouldn't say that was completely massive.
So you were still relying on Google AdWords, targeted Facebook, that sort of stuff. Yeah, amazing. And did that, and so then you start automating your processes and things, and so you're almost getting to the point where the human element is out of that customer journey.
Correct. Yeah.
Awesome.
Yeah.
And then did that obviously gave you some sort of economies of scale, and you can start pumping more and more sort of investing into the paid marketing, or what was the next step from there?
Well, the next step is we continue our trajectory to do paid because we're getting customers, and there was some structural profitability elements there. Before I even know what CAC to LTV meant, I kind of knew what I was paying on marketing and then what the average revenue that we're getting sort of per customer. And that was trending in a really good direction. But I guess the margins in that business were pretty tight because the competition on paid is very big, right? Every single bank is bidding on
Google
those
AdWords.
type of customers. And when you're the product manufacturer like a bank, you can afford to pay a lot of money because you don't have to pay any of the intermediaries in order to
bigger
get
margins.
Yeah, 100%. And
so the arbitrage kind of thing started coming away.
Yeah, huge amount of arbitrage in that market. And so we knew that structurally if we're going to win, we had to solve one part of the business, right? It's either we solve for the marketing part, or we solve for the actual conversion part at the back end. And where we actually ended up was completely different. And I guess, the title of the podcast being Weird Growth.
Weird Growth.
Maybe this is weird, maybe it's not, but one tactic, I guess, was we wanted to get, PR. We thought to ourselves, how are we going to get really big exposure? And we came up with this concept, which was super lame, right? Think about the concept of like dating and speed dating, right? You get together and you speed date people for like 60 seconds. And hopefully you find the love of your life.
Fingers crossed. Before Tinder.
Yeah, that's right. But we took that concept and we did that for mortgages.
Nice.
So the concept was called Data Lender, where you would go and literally sit down and 10 to 15 different banks would go and speed date you and try to win your business or win your love and affection for your mortage, right?
So this was an event in person?
It was like a physical event.
Far out.
Physical event. Yeah.
That sounds like a fun Saturday night.
Yeah. And that event, we thought, okay, great. It was great to have this event, but we didn't really think it was going to be a long-term sustainable approach to doing business. But we got picked up by Today Tonight. And that's when sort of things, dramatically changed. I tell the story about how we did that. We think, was there any big press release? Was there any big connection that we had at
Channel 7?
Channel 7. And there was none of that. I literally Googled producer Channel 7 Perth.
Far out.
A 08 number came up. I called them. The person answered the phone. I pitched them the story of this idea about dating your bank. And then a long pause for about 30 seconds and a little bit of, and then
we could do something with this.
And then the person at the other end goes, we'll run it. And
get out.
That's how it all happened. There was literally a month after that, the event sort of took off. Fast forwarding when the event happened, we got featured. But the amount of revenue that we generated in that particular night, it was like 400% of all of our entire traffic in one day that we generated in terms of revenue. In fact, we got to a point where we didn't have enough resources internally to get back to all those leads and inquiries, but that social proofing of us being on TV and helping people out in that process was just absolutely amazing. In fact, after that period of time, we didn't spend $1 on marketing.
It was game over.
Until the end. We had the repeat business coming in from borrowers who were looking to buy another property and referring their friends and family. So, in years 4 and 5, we ended up being structurally profitable. So that was,
Man, that's amazing.
the last part of the journey. We weren't wildly profitable because we still had the problem of, the getting people in at a higher velocity, and the volume of people wasn't to where we wanted to ultimately get to. So, we ended up selling the business in 2016 and integrating that into another company called Pioneer Credit.
Yeah,
and,
congratulations, mate.
Oh, thanks.
So that unlocking of the PR and the media, and you use the word social proof, is such an X factor for so many people, and it's difficult. In fact, it's like, someone comes into our office and said, "Oh, we just want you to make us go viral. Can you do that, please?" And the answer is no. Like, it's not. If everybody could do that overnight, then we'd all be billionaires. But it's just not. Doesn't work like that. So it's actually having that deep insight into how your customers think, and the problem. In fact, probably even better than they do, so that you can unlock that little thing, which in your case was that data lender, which captures people's imagination. It's a little bit edgy, a bit out there. Today, tonight's going to give it a run. That's actually the key. And so many people, it takes a few years to get to that point where you have that intimate knowledge of your customer. And so I think it sounds like that's where you guys got to, is it was just a no-brainer. You sort of had that idea because you were so close to your customer.
It was something that was tacky. We didn't know whether it would work or not. In fact, I just remember I had to actually go home and change because I was sweating so much in the day. And we only had the event started, I think it was at 5:30, and it was like 5 o'clock, and only one person had rocked up.
Yep.
And we're 5:15 came around, it was like 3, I was like, oh God. And then the TV studio came along. There was 10 people there thinking, holy goodness, is this thing actually going to take off?
Yeah.
But then lo and behold, latecomers.
Yeah.
People,
but this is the thing, things sound crazy or impossible until they're not.
Until they're not, yeah, absolutely. Yeah,
and I've seen this happen so many times, but it's those things which just capture people's imagination. It hasn't really been done before, but it's still a concept that people can relate to. And the amazing thing about that content, so that probably 2.5 minutes that you're on Today Tonight or whatever it was, you can grab that video, and it's not just about the 2 or 3 minutes that I went to air on TV. It's the multitude of other places that you can use that content. And I imagine it was on your website or it was on YouTube, and you could put it on Facebook and things. And that's actually the multiplication effect that can happen with this PR content.
Yeah, definitely, 100%. I kind of see that now, to be honest. I mean, any PR, I don't know how you guys feel about this, but I think traditional media is going through such a change where the audience is getting smaller. And before, when you used to get featured on TV, you get texts from your friend, oh, I saw you on TV.
Yeah.
And then media these days, probably
it's just so fractured.
It's so fractured. And more people watch your content when you share and amplify it in your own channels to your own customer than, say, what your traditional audience would be out there in the wild.
Probably not wrong. Yeah. And, YouTube is the new TV. There are more people that watch YouTube every night than watch a particular station.
Yeah.
In that probably 18 to 40 age group.
Yeah.
In the US, 95.6% of people watch YouTube on a monthly basis. If you watch Netflix, so 75% of people watch Netflix, but 95% of people watch YouTube. So, and they watch it not just on their devices, but on their TV as well. So it has definitely replaced the physical, traditional free-to-air TV. It's quite amazing. And so the cool thing about YouTube as well is it doesn't cost very much to put content on there. You can target people who are watching very specific niche content with ads, pre-roll ads and things. It's blown the game apart. So you're right. But the thing about PR is it still works because you are able to leverage the brands of those existing trusted Channel 7 or Today Tonight or whatever it is. And just because they didn't watch it at that time doesn't mean that content isn't still powerful. It still means something, and it's still people still trust it. So that's the amazing thing about it. So that's awesome, mate. So you sold in 2016. How did that feel?
Oh, I mean, for 1 second, it feels okay, right? You kind of get to the end of a journey and you think to yourself, all right, what's next? I mean, for us, it was we had a fork in the road. Do we raise money, which we tried to do, I think to a degree unsuccessfully here based in Perth. And then we kind of saw that there was a lot of competition entering this space, right? And so what are we going to do? We're going to sort of try and scream from the rooftops here in Perth. Like, think about raising money in Perth now is difficult. Just imagine, what it was like sort of 5 or 6 years ago. The tech scene wasn't as sophisticated as it is now. But when we ended up going through that process of raising money, we found our acquirer. And so then the conversation sort of made sense of, do we want to keep rattling the tin? Or there's a really sort of attractive offer here that we could potentially do something together with. And then, and I think it was really good. When we sold the business, literally within 3 months, it was fully integrated into Pioneer's operations. And I literally stepped out of the business almost completely. And
there you go.
That sort of part, I think.
Is that common in this finance space?
Look, I don't think so. And I think depending on the acquirer, I mean, for us, Pioneer took Switch My Loan's assets and technology and repurposed that for its broader business. Okay. And that broader business had existing colleagues and people that could have amplified that business a lot more.
Yeah.
But I got to some really cool things within Pioneer. So being the forever entrepreneur, we created some internal businesses. So we created a free credit score platform called Credit Place. We created a personal loan product, a business loan partnership with Prosper. So internally, it was actually just like another mini startup.
That would have been awesome fun, really.
Yeah, it was really good.
Yeah, awesome. Okay, and so 3 months later, you're kind of going, okay, well, this is done now. I'm sort of looking on to the next thing, or was it a bit unsure of what was next?
Well, I mean, after sort of 4 to 5 years with my loan, look, I was bloody exhausted.
You're done.
Like in terms of working 20-hour days and doing all that type of stuff. I mean, it does get to you after a while. So, like towards the end of that sort of journey, waking up in bed was like freaking. It was hard, right? Because you were burning candles at sort of both ends. And so I think for me, it was actually quite a bit of a reprieve, to be frank, in terms of like knowing that we had a good landing and my mind could go to different places. And for me, I had other things happen in my life. I got married, had a kid, and bought a home, right? And all those things that I sort of put off for a very long time because you didn't have the time. In startup land, I got a chance to adult just a little bit.
So good. So good. Yeah, it's so nice to have that sort of clear space in your life to do those things.
Totally.
Yeah, you see so many people work through that and miss out on actually savouring, especially when you've got little kids. I've got a 2-year-old.
Oh, fantastic! Congrats.
It's just so nice to have that flexibility in your life to be able to be there for it. So, okay, so was there anything between that and starting WeMoney 18 months ago? That was a catalyst for where you are at with WeMoney, or is it basically you took some time off and?
Well, no, I didn't take I took a bit of time off in terms of when I was at the acquirer. I had my first holiday ever. Me and my partner went to Bali. And then
luxury.
I was, and we actually did it twice. The first one was like,
jeez,
it's a freaking holiday.
Yeah.
What's this time off? And then we went again like within a period of 6 months, and that was just it was amazing. But after the acquirer at Pioneer, I spent time consulting. So I was consulting because the demand for my skill set was really emerging. So I'd sort of seen the intersection of technology and finance coming together. Fintech became a term. Like in 2012, there was no term fintech, right?
No, what does that mean?
But 2014, 15, 16, it started to become its own sort of category and very sophisticated, companies emerging all around the world in that space.
Banks are starting to get disrupted and getting nervous.
Yeah, 100%. And I found a little niche for myself consulting where companies that wanted help with overcoming disruption in a real practical sort of applied way. I was consulting to ASX 200 companies that wanted help with combating disruption and things like that. But I also took a role with helping out a family office, deploy capital all around the world, and that was a really exciting experience being on the other side of the fence.
So would they call themselves like a VC fund, or
they were
was
probably
it
more of a private family office based out in Singapore, who were deploying capital all around the world, and I got to help out them and other people in that journey of deploying capital, and that was really cool. Yeah, sort of seeing what it's like to be on the other side of the fence, listening to the hopes and dreams and aspirations of entrepreneurs about their own businesses, and getting a deep appreciation for it, because a lot of investors that we sort of chat to now, you can instantly tell who's been a prior founder, right, or who's coming in from the more sort of professional investment management space. And sometimes the founder's eye in a business won't be the stats or the numbers or how shitty your deck looks or whatever. There'll be something that's magical about the founder or the founding team or something about their product that really sort of sings out to you. And so
this is something you start to get a feel for when you meet the people face to face. Is that
yeah, totally. Wow. And you, sometimes the non-tangibles are the real places where you can get what they call alpha, like returns
above and beyond the market.
Yeah, correct. And that was an awesome time. I really enjoyed that.
Can you describe what that X factor is?
Look, if it's a founding team or it's a founder, there's something about the founder's resolve and something that maybe it's hard to describe. It's quite ephemeral, but the desire to win and just the unrelenting sort of fashion. If this is what they're working on right now, and even if you know it's wrong, sometimes the founder will need to go and find out for themselves that it is wrong, but they'll end up uncovering, some magic, after that period of time. There's so many cases where what you invest in is not what ultimately the business ends up becoming. But I try to look at that for the founders, like resilience, never saying die, because you get punched in the face every single day, right? What do they call startups? Like chewing glass all the time.
Yeah, and staring into the abyss.
Yeah, correct. And if you don't know how to manage, those painful emotions of being a founder and a founding team, like your chances of success and escape velocity are going to be so much lower than somebody that does have that. And so what I look for is that absolute resiliency and wanting to win.
Yep.
I also think a deep appreciation about the market around the problem they're trying to solve and why they're trying to solve it. And for me, I'm biased, but the founders that I really am drawn to are founders that have a complete missionary approach to why they're pursuing their business, as opposed to somebody that's a little bit more, hey, found this big market opportunity and we're going to pursue it for economic reasons.
Yeah, it's got to be about more than money.
I think so, yeah, especially for a founder in the early stage, right? Yeah. I'm talking like pre-seed, seed, and pre-series A investing. Yeah, that's where the magic is. Once you get,
because that they're going to be able to go through that discomfort that they're going to experience. Yeah, because they have a reason at the end that they're driven to achieve.
100%.
Yeah. Oh, that's really cool. It must have been really rewarding actually to see that.
Really good.
Yeah,
fabulous.
And did you start missing the entrepreneurial stuff through that process? Did you start getting a bit of a hunger back, or?
I think the hunger was probably always there.
Yeah.
But I think in terms of life events, having a kid, having a small one, my one's 4 years old now, and so that sort of initial phase of having another human being that you're responsible for in the house,
definitely changes your outlook on life a bit.
It did, and I think that was sort of really good to go through that early part and journey and support my wife through our little boys start to life, and that was really rewarding. And I think after a period of time, I guess the thing that the penny really dropped when you end up doing consulting and you end up sort of putting proposals forward and the companies don't do anything with your proposals and you see them getting disrupted sort of day after day after day. There's only so much you can do. And I thought to myself, wow, the problem that I kept on sort of reoccurring, especially in finance, was one of the sort of the key reasons of starting WeMoney. And I think towards the end, I thought to myself, I was like 30, 32 at the time, thinking, you've probably only got one or two more moves left in your sort of 30s before your risk propensity sort of changes. And so I asked my wife, I'm going to go again. And it was after a few glasses.
Oh, yeah. You got the courage up to talk to her about it. Well, the thing is, your spouse is your first partner. From a business point, like they've got to be on board too, right?
100%. Yeah. And she was very supportive, and we sort of developed a good understanding that it was time to give it a go. And she was right behind me, and that was the sort of catalyst to sort of go and go again.
Well done, mate. Round two, ding ding. And as you say, when you're raising money, it's just the people are the number one thing that you look at, and you being someone who's done this before and had a success on your first crack at bat, to use a baseball term, must make that pretty attractive to potential investors and back yourself too, I suppose. You've done it before.
Yeah, look, I say this, and when we did our first pre-seed round, we kind of closed $500,000 in a matter of weeks.
Was this pre-product?
Pre-product. It was literally just 22 pages of a hope and a dream.
Just a slide deck.
Just a slide deck. Literally just a slide deck and maybe a potential track record. I think you're overly generous, but I think that process took 7 years in the making. And it was all the no's and all the people that said no to investing to switch my loan.
Yep.
In fact, I picked up a mentor through that process. And I remember going to his house and pitching Switch My Loan. And he kind of thought about it and ruminated on it. He did a mystery shop on us and ultimately said no to investing. But I picked up his friendship and his counsel. And throughout that process, he was the one that unlocked that opportunity for me to join the family office and help them out with their deploying capital. And then when I went to him to ask for cash, it almost felt like he didn't care what I was working on.
Yep.
But he knew that
you were going to be successful.
The second time round, that maybe the chance of potentially making something work was slightly higher than zero. So I was really grateful for his process, and he was the one that said yes first, and then we were also backed by another VC called Full Circle.
Cool.
And that process was just Rowan, who's the general partner over at Full Circle, coming to Perth, having a coffee, pitching the idea and concept of WeMoney for 20 minutes, asking him on the very first time that I met him face to face, would you invest? And then him pausing and going, yeah, I think it's something we would look at. So
that's something that most startup founders would dream of. It's pretty cool. Just before, I'd love to hear more about WeMoney,
sure.
But you mentioned mentor.
Yes.
And something which I notice a lot of successful business people and founders do have a mentor. And it's not necessarily, it's something that often happens just organically. It's not necessarily something you go out and artificially try and do, but how has that helped you in your career, and how would you recommend that others, or would you recommend that others find a mentor, and how would they go about it?
Yeah, totally. Oh, look, I cannot tell you how much mentorship has helped me in my own professional and personal development in all parts of life, not just business life, but also personal life.
Yeah.
My very first mentor was a person that I met when I was 15 years old doing work experience in a real estate office.
Yep.
And he was, 6-7 years older than I was.
Okay.
But a mind well beyond his years. And I sort of saw the power of having friends or people that are a little bit older, right? They'd been through the journey and made a lot of mistakes in their time, but could learn from maybe the lessons that they'd learned through their journey in navigating business or social things or whatever else.
Yeah,
and
it's pretty cool to realize that at a young age, at 15.
I think I was just lucky. I think I was just literally just very, very fortunate that I met an amazing individual that ended up becoming not a mentor, but also one of my best friends.
Yep.
And then I'd formally asked my mentor that said no to investing at Switch My Loan. I just point blank. I did the classic thing: go to a coffee shop and ask a person, and he was very open to it, and that was amazing. Nice. And I think in the back of my mind, I was thinking to myself, like, this person, why the hell would they want to spend any time with somebody else? But there's clearly a lot of value for them as well, because they get to contribute to somebody else's growth and personal development. So
absolutely,
I could not recommend that enough to anybody.
Yeah, well done. Yeah, I've had mentors in my life as well through professional things, but I think the thing that's working for me really well at the moment is I'm a member of a peer mentor group.
Nice.
And so there's a dozen other business owners. It's actually organised through an organisation called the Executive Connection, and you pay a membership fee for this. And so it's very formal, but the benefit that you get from being surrounded by, other like-minded people who have been through those challenges in life or are going through them, and, invariably someone knows, a great way to solve a particular problem. You can be very open and honest with them. It's just such great comfort, especially as a solo, business owner or entrepreneur, or if you don't have a business partner, who do you answer to? Having that is critical for your progression, I think. So,
totally.
Yeah.
Yeah. 100%.
Thanks, mate. So let's talk about WeMoney. I'm a very happy user of WeMoney. It's a pretty beautiful, cool product. And you've had some awesome growth over the past 18 months since launching. So where is it at, and what is it all about?
Cool. Well, maybe I'll just start off how we got to sort of launching WeMoney, and then talk about where we are now in terms of maybe growth. But I registered the domain way back in 2016.
Did you?
And I'm a domain hoarder. I just love buying weird, wacky domains. Once something comes in my mind, I'm just trying to figure out the URL if it's available.
Yeah.
And quite thankfully it was.
It's the first tangible thing you can do towards building a business, buy the domain.
Yeah. But I had no idea the concept of what it was going to be. It was just literally one of the list of many, many domains that I had. But I think the problem actually that I saw was started all the way back in banking, really, because when I was in the banks, you kind of spoke to a lot of people and you thought, all right, doesn't matter where people sat, whether they're professionals, whether they were working class or wherever they came from, any walk of life, your knowledge about finance was literally poor. Doesn't matter who you were. We had like solicitors who were asking, pretty sort of basic questions about their money. And then I kind of dawned on me going, that's really odd. But then when we got to Pioneer Credit, for those who don't know, is a debt recovery company, and so their major focus is helping people get back on track that have gone through pretty disastrous, personal financial circumstances. And I just recall, listening to some really harrowing stories about people going through these really awful things in their life and not having the confidence to address them.
Yeah,
and
it can be all encompassing, I'm sure, having financial
It absolutely
issues.
is. And then I thought to myself, the problem of bad money management affects all people. And I think, some of the probably more non-obvious reasons why that is, and something that really is the reason why WeMoney exists now, is that to get to the essence of some really harrowing stats, like almost half of Australians living paycheck to paycheck, people feeling financially vulnerable, having really bad outcomes in life in terms of how they manage early financial products and not being able to use them, resulting into credit defaults. And about 4 million Aussies go through some type of negative credit outcome.
4 million?
4 million, yeah, correct. And so it's actually quite more common than what people realise. And you don't really sort of scream that from the rooftops, right?
Yeah.
It's something that's deeply personal to a lot of individuals. But the more we delved into it, one of the probably, aha moments was that, bad money management is actually not the fault of ourselves, right? It's actually baked into human evolution.
Is that right?
And yeah, 100%. Well, we really believe so.
Yeah, right.
And so if you think about where we were, say 100,000 years ago as hunter-gatherers, right? We didn't have the degree of complexity that we live into now, right? We had very simple needs that we had to meet.
We didn't have Bitcoin.
Or
any kind of currency for that.
No, we didn't. But in today's age, if you think about even the last sort of 100 years, we have now started to really professionalize financial services. Going from obviously barter to currency to right now where we basically have electronic credit that can be extended and savings and whatever else.
Yep.
But the modern construct of, say, a credit card was something that really materialized in the 70s and 80s. And if you think about that product and you ask a person, when is my next credit card repayment due? What's my credit limit? How much do I have outstanding? There's all these dimensions that the brain needs to compute in order to really sort of understand, hey, if I spend $100 today, what impact will that have in my future life?
Yep.
But if I spend like $2,000, do I have enough money left aside to pay my rent and do all those type of things?
Yeah, you have to project your cash flow out 2 months in advance and understand all the moving parts. It's almost impossible to do in your head, I suppose.
Yeah, 100%. And so, one of the stats that I've heard is that the human brain can only process about 14 kilobits of data per second.
Jeez, we're dumb.
But what we really need is like a supercomputer that can really understand our full financial life and picture, and more importantly, abstract away the decision-making process and some of our biases that we have as humans towards making short-term decisions. And so that sort of decision science was absolutely fascinating to me. I studied a little bit of that overseas, and then that sort of click sort of came in where I thought, right, if we're going to solve this problem of really helping people live their best financial lives, it really has to go down really deep into the human OS and how we're programmed as humans to sort of course correct us and save us from ourselves, right? Yep. And that was the birth of the essence of the problem that we wanted to solve, is helping people live their best financial lives by really automating that entire value chain of their money. And so that was the birth of WeMoney, thinking to ourselves, right, finance is an autopilot, but plus, this other emerging phenomenon that was occurring where, our parents, Cam, probably weren't going to be talking about their money openly and publicly with their peers.
No.
Right.
It was a taboo subject almost.
Totally taboo, right? You would never, ever in your wildest dreams.
Like politics, religion and
exactly,
money.
It was in the same table at the dinner table or out with friends. But today, what we're seeing is, Gen Zs and millennials, scream from the rooftops.
Yeah.
Right? What side hustles they're doing, how much they're earning comparing
investing in shares,
investing in
crypto,
shares,
whatever.
Yeah, correct. And so we sort of saw this really interesting phenomena where the structural reasons behind this we think are actually to do with the GFC, because in 2008, a lot of people that were promised, hey, I'm going to graduate uni, I'm going to get the job of my dreams, and I'm going to live this awesome life, right? That was short cut for a lot of people.
Yep.
And they also saw at a very young and formative age that their parents being affected by that. And so their predisposition to money and money management was completely different to their parents' generation. And sort of having seen that, they kind of self-organized into groups on like Reddit, Instagram and Twitter, and now TikTok, and just actively talking about their money. And we saw this really, really long-term secular trend where the conversation about money is becoming more social, and the pain of managing your money is there, and how do we automate that? And so really, the we and WeMoney is that sense of community, of coming together and finding help and support from other real people navigating money journeys and doing that together. And
where does the sort of move towards cashless play in with this as well? Do you think that sort of facilitates the community aspect of things, where it's no longer just some paper and coins in your pocket, but this other thing that is less tangible?
Yeah, 100%. Well, with the move to cashless, I think the last sort of stats is that almost 70% of every single payment in Australia is now digital, right? And that's been increasing. And so there is a natural sort of inclination for us to completely think that at some point it will become 100% digital. And I think with digital, you get a lot of other metadata and feedback points, right? Because when you withdraw $1,000 from an ATM, and spend that money, you don't really have any type of record. There's no exhaust that comes out of that transaction that you do. Yep. But when you do it digitally, you know, hey, which merchant did I spend it at? What was the category of that particular merchant? So you can build up a better understanding of, your spending profile.
Yeah,
based
habits.
on habits. And so right now, like if you were like, I don't actually carry a wallet anymore. I've literally got my phone.
I haven't had one
watch.
for 2 years.
Yeah. And
it makes it a bastard when you try to go to a club and they want your physical ID. It's the worst thing.
I think it's being solved now. I know in Sydney they've got the concept of digital ID, but
fix that here in Western Australia.
Totally. But you wouldn't catch a young person right now, like sub 40 or even 35, being caught dead with like a pineapple in their pocket, right?
No.
That just doesn't happen anymore.
Dirty money.
Yeah.
Especially with COVID. Like, it's weird.
Exactly.
But people have this thing about it.
Yeah, and so I think 100% that drive to a cashless society has actually birthed providers, especially in the fintech space, to take advantage of that and help more people understand their money a lot better.
Yeah, it's so cool. And using WeMoney, I get to plug in my credit card feed, and so it watches the transactions and starts automatically categorizing those. And at a glance, I can see that I spent $60 on coffee last week. Like, what are you thinking, mate? That's where all your spare coins going.
Some nice coffee.
It adds up so fast, these sort of microtransactions, and you never get that insight into your spending behaviour unless you are either a anal person keeping an Excel spreadsheet with all your receipts, or you're doing it all digitally, and it's getting done by something like WeMoney. It's really cool. So when you first launched the app, sort of, how did you get your early customers there? How did you sort of announce that to the market?
It's a great question. Look, what we did is we wrote the first line of code in October 2019, and then we released the app in February 2020. And we released that we thought to ourselves, all right, how are we really going to build and co-create this product? Because we had a good idea of what features it should have. So number one, account aggregation. Number two, having access to your credit score. And we didn't have the community feature built in yet, but we had like this V1 version of this like really awful feed. And,
it
like currently
still
exists today in more or less, but it's something we're looking to improve on. But it was a very V1 concept of the product. And what we did is we initially went out to 60 odd people and had interviews for about an hour and a half about the type of features they'd want to see before we actually wrote any or created any big features. And we did a lot of surveys in that process as well. And then we released a product with people inside the financial community. So people that were actively sharing their content on places like Instagram and things like that.
So
and
influencers.
Influencers. Influencers to a degree, but I wouldn't like, I know it's only like a year old, but even back then, the industry didn't really have a name. You know, influencers I take as a term as being like less than sort of 6 months old almost.
Yeah, I just made it up just then.
Well, it's real.
Yeah,
it exists. You know, that's what we call them.
I didn't know that.
But we saw that sort of growing sophistication in that space, and you know, there was people like Aussie Debt Free Girl, where, you know, she would share and still does share amazing content to complete sort of strangers. And I actually hit her up on Instagram and just said, hey, we're thinking about building this product. What do you think? And she gave us a lot of that early advice. But what she then did is unlocked us to like this deeper subculture of these other people that were like sharing hints and tips about money. And so we co-created the product with 300 core users for about 7 to 8 months in stealth mode before we actually released the product in public. And so
it's genius.
October is when we released the product, and the AFR was responsible for our sort of PR release. And hey, we're here, we're coming out of stealth.
Yep.
And ever since then, we've been using a couple of different strategies to grow the business, but you know, PR, really big one. I think that's the muscle memory from, you know, the Switch
Yep, that was the tactic you saw work last time.
Is we had to get involved with media in order to get disproportionate reach. There's no point trying to, you know, paid strategy is obviously still part of our mix, but becoming less important as the days and months roll on.
Yeah, wow.
But PR, we thought, if we're going to really sort of win the hearts and minds of people and get them on board in our mission and our journey of creating a business together, then that's not going to come from, you know, 60 lines or 60 pieces of text in a Google AdWord.
Or an ad that someone sees for 3 seconds. That
Correct.
People want to connect with that story and understand how it's going to impact them. Yeah, that's how we process information as humans, right?
Yeah, correct.
And so the paid stuff that you are doing, what sort of tactics are you seeing are working to some extent there?
Yeah, look, I think so. In terms of, you know, how we go to market was we've got PR. It's a really big, you know, strong focal point strategy. So we go through the process of, say, collecting the logos, right? Getting the Sydney Morning Herald, getting the Fin Review, getting the news.com.au.
As seen in,
Yeah. And then we've got the paid, which is really expressing the value proposition of WeMoney to an audience of customers that's probably going to be using the product. So the big pain point right now is that on average, people between 18 to 35, as you get older, you accumulate more financial accounts. So somebody today, like the median age of a WeMoney member is 29 years old.
Right.
And that member will have upwards of about 7 financial accounts connected. And so it's multiple different credit cards, it's buy now, pay later products, which then don't just have Afterpay, they've got Zip Pay and the others.
Yep.
Superannuation they've collected from those 4 or 5 jobs that they haven't yet sort of put together. And so when you look at the real pain point is that if you want a really big snapshot of your money in one place, we said, right, that's our paid sort of go-to-market proposition because people have got a very short time to get convinced by value.
That's the killer feature.
Yeah, they can learn about the community and the other stuff a bit later on. But if we're going to go out and spend all this money on, say, trying to educate people on building this awesome financial community, that probably
it's a hard sell.
It's a hard sell, 100%. And so that's part of the marketing mix, I guess, on the paid side. And then we've got, you know, great relationships with people that are fans of WeMoney, influencers that, you know, help support and grow the message of WeMoney to their membership base. And then I think at the moment what we're trying to think about is roughly about 30% of WeMoney members refer their friends and family members to us.
Wow.
Yeah. And we have a double-sided referral in the product, which basically rewards Cam, if you refer your mate to WeMoney, you get $5, your mate gets $5.
Yeah, so that's the old PayPal playbook.
Yeah, that's right.
Yeah, nice.
But what we've realised though is that there is an attribution error in that data because we've recently conducted some massive user testing. We've spoken to all of our power users and all the people that really love the product, and about 20% of our users use a product at least once every single day. Right?
Is that right?
Yeah.
Wow.
And of those particular users, we kind of asked them, like, you're obviously getting some value and utility from using WeMoney, but then in that feedback session, we also heard that, oh, yeah, I've referred it to 15 of my friends. And we looked at the data and go, hang on a second, you haven't used the referral code. It goes, oh, yeah, but like the $5 isn't that important to me. But,
wow.
you know, me telling my friend who's actually got some issues at the moment with their finances, I feel like I'm just obliged to tell them to just go download it. And so we are getting now, I think, the inklings of a network effect. Very small, but it's really interesting to see that feedback coming in.
It's really interesting, yeah, because you do see that there's a certain proportion of the population, maybe 5 to 10%, who are like super connectors.
Yes.
And they live for introducing people to other things or people, you know, and that's like that's just their thing. That's what they're good at.
Yeah, 100%.
And especially when they find something that they love, like WeMoney, they just want to make sure that everyone knows about it. And they were the ones who told their friends about it. So, yeah, that's really cool that you've kind of scratched the surface on that. That's awesome.
Yeah.
And, yeah, whatever you can do to sort of level that up. Is it okay quickly just about the PR stuff?
Of course.
Because a lot of people, it's a black box. They don't know how it works. And it's just like so weird but unpredictable how you would do it. Do you mind me asking, how do you guys do it? Do you hire a PR agency? Do you do it in-house? Or
we do all the above. Like we're not sort of tied in, because I think, you know, with when you think about the PR problem, it's like you hire a PR agency, they've got to have the right sort of product market fit to your product, right? Do they actually know your space and not well?
They're the connections with the right.
Yeah, correct. And then you've got to sort of realise, well, you're pitching a story out to a lot of journos and whatever else, and you know, are they going to be interested in your story? And so you don't really know. And I think for us, we've just taken an approach where we just literally just said, we'll just try everyone, right?
Yeah, scattergun. Yeah.
We'll just see what works.
Cool.
So it's a bit of it. We've got a person internally that does it that helps out with writing sort of press releases.
Yep.
But we also use a lot of agencies, and we use more than one.
Yep.
So we tend to take a differentiated approach to you know, one particular PR specialist might be really good with a few couple of, you know, news outlets.
Yep.
We have one agency that we use particularly for radio and TV.
Cool.
And so there's actually a mix that sort of comes together right now that forms that approach. But we definitely need help as an early startup. You can't do it yourself. You can't be the one that's fielding all the calls or trying to get it out there. But
That's all you would ever do, yeah.
Yeah, correct. So we get a lot of help from people.
And so do you create... So, you know, something I sort of say when people are interested in doing PR is, you know, start off with just your, you know, a one-pager. You know, this is the things that you want people to know, like a media kit.
Yeah.
You know, have your assets there ready to go, you know, some nice pictures. But really what you're trying to do is make the journo's job as easy as possible.
Oh, totally.
Like they have blank pages that they need to fill and airtime that they need to fill every day.
Yeah, 100%.
They're looking for something. Like if you help them and make it as easy as possible for them, then the friction's going to be so far reduced. Yeah,
100%. Actually, a very good point. What we also did to make it easier for the journos is we went off and did a professional photo shoot, and we had about 25 different shots, right?
So like press quality.
But then what we also did is we gave the journos an exclusive to that particular photo set.
Nice.
And what that basically means is that saves in the... we've got to get the photographer out there. It's going to take 3-4 days. You're going to try to find a time. So we just said, all right, let's make the journo's life 10x easier. Here's a professional photo from like a really, really good photographer.
Yep.
It's differentiated enough where they won't feel like the photo...
This has been a copy and paste from the guys last time. Yep.
100%. And they get to use that exclusively. And I think that also really helped out because when they're looking at packaging the story, it's not just going to be the text. It's going to be, you know, really sort of capturing an arresting photo.
Yeah.
That's going to help that journo write the piece.
It's a great point. And the other thing that journos want to be first.
Yeah.
So, you know, you obviously can't be the first every time, but you can find a fresh hook or an angle, which they can be the first on.
Yeah.
So you can help them out on that.
Totally.
And the other thing is, you're basically just trying to find ways to save them time. You can almost like pre-write that kind of angle as, you know, as if the article has been written for them. They can grab that, look like their guns, rework it perhaps. But it's finding ways just to make their job easier, I suppose.
100%. And I think the uniqueness, I mean, the classic cases of PR is that you've got to find something really unique to tell the story. If you're coming up with something pretty generic, you're going to get picked up. So, you know, make it, put your best foot forward, right? Find something that's really unique about what you do that no one else can. And it could be a unique insight or story or something that's really sort of quirky that people will pick up.
Like dating your banker.
Like something like that, yeah.
What a good idea.
But if we were just going to give like little tactics, I mean, Source Bottle has just been phenomenal. I mean,
Right.
yeah, that's just like, you know what journos looking for. They're looking for that weird story that you might be able to fulfill.
Yeah. So Source Bottle, ladies and gentlemen, check it out. Who's a perfect customer for WeMoney?
Well, we've got sort of 3 persona groups, and we kind of consider them all perfect in their own way. But the people that we really help is we have a persona group called Jasmine the Jaded, and Jasmine the Jaded is the person that has gone through her early stage in life. She's about 25 years old. Yep. She's had some type of negative event with money, right?
Yeah, okay.
Either had a reduction in her credit score.
Yep. Probably had that little mid-20s reality check about life.
100%. Yep. Yeah, totally. And she's really motivated right now to say, all right, well, you know what? I can see my sister, she's like 30 years old, she's got her stuff together, and she's bought a home. That could be me one day, but if I don't look at my money right now, then 30 is going to arrive like very, very quickly.
Yeah. And I was 20 only a minute ago, and now here I'm in my mid-20s. Yeah.
Yeah, 100%.
Yeah, right. Okay.
And Jasmine's sort of problems that she wants to solve is to understand her money a lot better and improve her financial situation to obtain, say, home ownership.
Yep.
We've got Harry the Hopeful. Harry the Hopeful.
It's cool that you name your personas, by the way. It makes them more human, right?
Oh, totally. Yeah. 100%.
Do you have them in the office, or do you?
We have them virtually. So we've got a Google slide deck that basically does them. And in fact, with Jasmine the Jada, we interviewed somebody who was Jasmine, and she was off by like 1 year, but everything else was like tightly aligned. Yeah, it was amazing.
This allows you to build not only the product, but the marketing and messaging to that person. You're basically speaking to an individual. It's really powerful.
Yeah, 100%. And that's what we over-index on in terms of understanding our users, doing a whole bunch of user research, and the team also doing that as well. Like we have a designer that does a bit of that, but what we've done recently is that the whole team goes out and does the user testing.
Nice.
And that allows them to build deep empathy with members that are already in our platform and learn from them directly, and that makes their own journey like way more successful in their own product thinking and things like that. But
so you got Jasmine the Jaded, Harry the Hopeful.
He's a bit older. He's 32 years old. He wants to buy a home. He's kind of delayed it for a little bit. He's a late bloomer, as they say, and he needs to like now get his stuff together to get to a point of applying for a mortgage or consolidating.
WeMoney's going to help him sort that.
Yeah, correct. And then we have Paula the perfectionist, and Paula the perfectionist just knows her stuff. Right, she knows exactly where she's going to in life. Every single account, is completely and utterly ordered. She is just on top of everything, and we help solve a couple of her technical pain points, which is that account aggregation piece and seeing everything together in one place beautifully, but also monitoring everything like a hawk. And she's really interested in building up her net worth and buying an investment property. And so they're the 3 people that we help, and we help them in very different ways.
Yeah. So Paula may well be that super connector. The one that's introducing it to your friends.
And they're the ones that are coming into the app literally every single day.
Amazing.
Doing something, checking their transactions or browsing the community. Yeah.
Mate, that's great. What could possibly be next for the future?
Well, we sort of see, the hill that we ultimately want to die on in the next, phase of our journey is that we really want to see finance become more social. We think that's sort of the big opportunity for a lot of young people in particular who feel not confident about money, but want to get help and support from other real authentic individuals navigating that money journey together. And we are going to, and we have at the moment over-indexed on really expressing that community feature and development and build out. It's a long, painful process, but I think
it does feel like it's probably the one feature in the app that's not quite.
Yeah, it's a 1 out of 10 in our own.
Right.
Yeah. And so the roadmap that we've got around the community is something that's going to be really exciting. And
awesome.
I think some of those developments that come out, in the next months and years are going to be the things that we're really excited about. But we're also thinking to ourselves, all right, how can we get closer to the transactions? How can we get closer to, helping people really get to that point of automation and helping them, move money instead of just looking at money? And so some of the things around open banking that are coming online now are really going to be really interesting for people to really automate that journey in their life.
Yeah.
So
it does see that the ASIC and Australian sort of regulatory space is starting to open up and do things which are designed to create competition and
open banking,
in the finance space and innovation. So it's really exciting to see. Yeah.
Yep.
Cool, mate. one big piece of advice to other founders looking to grow and get started?
Speak to people, right? You don't know when a little nugget of amazing feedback and advice will come from, and it often comes through a conversation. And so what I've done is probably around an hour or two per week, I set aside time to connect with other entrepreneurs, either as a give back or people that I want to chat to. And I think that founder connection with other founders navigating that journey is absolutely awesome. I want to shout out another Perth founder, Tyler Spooner. Him and I, catch up very frequently. We typically
from Uno Group.
From Uno Group, that's right. He's doing amazing stuff there.
And former guest on the podcast.
Oh, fantastic. There we go. Him and I, we in summertime, we'd catch up and just go for walks around Kings Park for about 45 minutes. And some of the insights we unlock about both of our businesses is amazing. And you know what? That conversation is not, here's a problem. We just talk about our businesses.
Just riffing.
We riff, but we talk about what's going on. We don't respond to it. We just talk about what we're doing.
Yeah,
and cool. That's an amazing unlock, I think, for all founders, is that speak to other founders going on the journey.
Yeah.
And I think that deep empathy that you can build up with other people that are in a similar spot to you, it can actually help you out quite a bit. So that's my
great piece of
big
advice.
takeaway.
Yep. All right, we're getting to the end. Show and tell time. So this is where I ask, what is just the one tool or device or piece of software that you use that makes your life better every day?
Well, I was going to get them. They're on the couch behind us, but they're Sony XM4s for anyone that wants complete and utter peaceful work.
Yeah.
When you've got kids at home.
Yep.
Get yourself a pair of Sony XM4s.
So what are these over-ears?
Over-ears.
Yeah.
They've got noise cancelling. They're the lightest things in the world.
Amazing.
I don't have a referral code for Sony, but I probably should. But they
might after this.
They are absolutely amazing piece of kit. And I think what they've done for me is that with all the chaos that happens in life from work from home, my wife also works from home now and again, and having a little one that is not in daycare and not sort of pre-kindy at the moment, I love spending time with him when I spend time with him. But when I'm at work, I'm grinding, I'm going to be there with the team.
Especially if you're working from home.
That's been the biggest unlock, is just noise cancelling headphones to just completely get in the zone.
Love it. It's kind of like flicking a switch, like, okay, it's work time now. And that's
100%.
Yeah, nice. All right. Well, so what's the final plug, or where can people go? What do you want people to check out?
So we are hiring at the moment. So if you're a full stack engineer that wants to come and join a mission purpose led business, then
why
we
wouldn't
are
you?
absolutely all ears. We develop in Golang, AWS, and React Native. So if you've got any skill sets or you want to learn something in that space, then we would love to hear from you, and check WeMoney out. WeMoney.com.au. It's free to download, free to use, and you can really unlock a deeper understanding about your money and connect with other people that are also navigating the same money challenges that you are in life. So
it's a beautiful user experience as well. Like, you guys have obviously really put a lot of thought and effort into that customer journey, onboarding and everything. It's really fun. So yeah, definitely check out WeMoney. That's cool. Yeah.
Thanks, Cam.
Anything else?
No, mate, that's it.
Mate, thank you so much for being so generous with your time. I think we've gone longer than any other interview that we've had at Weird Growth probably. And really appreciate it. It was a great chat. We learnt a lot. So thanks so much, Dan, for being on Weird Growth.
Awesome. Thanks, Cam.
And so that's it from us. If you enjoyed the podcast, please do subscribe, rate us on Apple Podcasts, YouTube, and leave a review. And until next time, bye-bye.